This is our Forex blog for August 10th, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. We have the real-time trend strength on the top in histogram form. This is made up of 5 of our best statistical tools. 3 of them measure the direction the yen pairs are going versus all the rest, and 2 of them measure the intensity. So it's just it's kind of like force equals mass times velocity. If the majority of yen pairs are going up and they're doing so with incredible intensity, guess what? That trend's likely to continue. It's that simple. Underneath that, we have the 15-minute trend, hourly trend, daily, weekly, monthly. Obviously, the more time frame trends that line up, such as the euro's down on all time frames, versus the yen that's strong on most of them except for the weekly and monthly, you got a great trade. You want to sell the weak ones like the Swiss versus the yen or the euro versus the yen. Then you bring up our chart, and this is showing our new FX value areas. The yellow area, which happens to be right on top of a Fibonacci retracement area, shows where most traders had positions yesterday. Underneath that, it tends to go down. The lower value area is where between the red lower one and the green upper one, this is where 68% of yesterday's trading activity happened. And these things are like magnets. We also show those for the previous week, which is the point of control, and the upper value area for last week was right here. Major area of support. You can see it hit it, bounce off, hit it, bounce off, and once it broke it, all the stops are underneath there, and it fell another 40 pips. So these things act as magnets. Once it goes under here, you want to sell it all the way down to here. You might look for a counter trend trade here if it wasn't so weak. It is weak, so you probably want to pass on that. You can see all the time frame trends are down, and you go short. Now, I am trying to make trading even easier by just simply having a red-green, system with the bars. Let me show you that on the euro dollar. Here's a simplified chart just using 5 pips per bar. This is our range chart, and the statistics of how strong or how weak the euro is versus the dollar show up in many different shades of red and green. The darker the red, the weaker it is. So if it's underneath this level, you want to look for short. You can see it's mostly weak. You could have sold the low here or waited for a counter trend move here. Typically, I wait for a 15 to 25 pip pullback after it makes a move. So this barely meets that criteria, but once it goes up a little bit more and comes down, that's a decent trade. You get short right here, it goes down. You can see down, down. And then as it starts to retrace back up, notice this is really the darkest green the bars have been. You might buy this breakout right here. And another thing you can do to make it easy to trade with, just simply use our new digital signal processing displaced moving average. You put a 5-period moving average, shift it to the right. I like to make them white. And you can just simply buy and sell and use this as a stop when these levels get broken. It's very fast, and once it pulled back here, you would have had a loss, small win, decent win, big win, small win, big 20, 30 pip win, and notice how it picked the low here, and it pretty much kept you in there all the way to the top. So those are easy ways that brand new traders that don't know anything about support resistance can trade while they're learning. Here's another currency of the euro dollar, and notice the point of control. It's underneath that. The orange big one is the average price of the previous week. It's very critical. Underneath that, it's likely to go down. Notice how these act as magnets. If it can't get back above here, there's no strength on the way up here. Once it starts going down, you go short. You write it down here. You made 20, 25 pips. Again, wait for a decent-sized pullback. You might have made 5 or 10 pips on that. And then once it breaks down underneath here, you probably lost on that one, and you made 15 to 20 pips on that. Notice it went right to the value area low the previous week. This is a very key level where a lot of the world's biggest traders put positions, and if it can't get underneath there, it's likely to work its way back to here, which it did. Notice how dark green the bars are. It's the greenest it's been all day, so when it breaks above this level, these things kind of tend to act like magnets, and it's likely to go up here, which is 25, 30 pips away. You risk 10 pips to make 30 pips. You don't even have to be right 40% of the time to make money. And that's the key to trading. Small losses, big wins. Don't even worry about whether a trade works or not. Here's the pound dollar. Notice it went underneath yesterday's value area low. It's underneath the point of control, the average price. You can see it fell 20 pips. This isn't that much of a pullback, but this is. It can't get it back above this area here, and it goes down again, as you can. Also, just like with the euro dollar and euro yen. When this went back up, notice how this support area now acts as resistance, and it acted as resistance here. The bars are dark green. When it breaks above there, it's likely to go to the next level. And today, it was such a strong trend, it just continued. And the reason it turns light green here is because, pound pairs are going up, dollar pairs are going down, but between all the dollar pairs, the pound is probably the least strong. The pound or the euro dollar was probably stronger. The dollar Swiss was a weaker one to sell. And as far as trading easy systems, here's the pound yen, just with the candle bars on it. Let me add our new FX value areas, which I really think are one of the best tools in our software, because in the past I haven't been much of a breakout trader, but now I just absolutely love breakout trades. If you see, this is the average price of the previous week. And by the way, this tool only works live. That's what you can see last night when I added to the chart, start showing it. When it breaks through here, the next level is all the way down here, and the market went right to it. This was an astronomical 90 pip move. You fell, you wouldn't have made the whole 90 pips, but you might have gone short here, had a loss, short here, a small win. And then obviously simple tools that everybody has, such as trend lines. And in fact, you might have even sold here with your stop above the high, had to wait a little bit, and guess what? Came right back down to the bottom here. Just went green, kept it green all the way up until here. So you can use these areas combined with Fibonacci profit targets of this swing. Guess what? It's a Fibonacci profit target. It's also a very key support area that the world's biggest traders pretty much are the only ones that use, but they're the ones that move the market. So if they use it, I want to be using it. And you can see those two areas, an intraday support level, a very longer term weekly value area the previous week. Huge, huge move. That's why I put these weekly ones with thicker levels. Here's the dollar Swiss, and you can see, when a currency gets super weak, it tends to continue. And let me add the FX value areas to this chart. I'm just testing a new red-green system. When a currency is above, breaks out above the upper value area, it tends to go up. When it comes back into the previous day's value area range, it's likely to go to this level, or this level. These act as magnets. So if you sold here, you're likely to make 20 pips while risking less than 10, because once you sell, you just put your stop right above these range bars high. You're risking 5 pips plus 1 pip padding plus the spread. You have less than a 10 pip stop. You should be able to pull the trigger with no problem when you see a dark red bar and it breaks through here. It goes, and this one just keeps going and going. I would have probably got out right here at the previous week's value area low. It's likely to have major support, and it does. And you made 10, 20, 30, 35 pips while risking about 8 pips. And if you bought every breakout, usually the first time it doesn't break through here, the second time it comes up, you're basically looking for it to go above here. So you might have gone long right here, and guess what? It's not going up. You had every opportunity to get out of this trade with 3 or 4 pip loss, came back down, didn't fall back down to here, broke out again. You got to get in it. You got to draw your fibs on there to have an idea of where your profit target is. And you can see it went up real close to 1.618, came back down again. You take 10 or 12 pips on there. So if you lost 5 pips and made 12, you still netted 7 pips on this. And then you sold here and you made 35. And that's trading. Some trades work, some trades don't. You don't really care. You take every good trade you see and you profit on the ones that are that pan out. But just notice how well these FX value areas work. I'm going to add it to this chart. First of all, we start today's trading at midnight inside of the previous value area. It's above the value area, so it's very likely that it can come down here. I mean, the point of control is average price yesterday. Most of the time it's going to find support. It's going to try to go higher. It doesn't always go above this area, but when it does, you get a big move. And it didn't find support. There's no one buying here. So, when it came back up again and came back down, you go short and you ride it all the way down. You made 50 pips on this. Or you made, you got out of it right here and made 20, 25 pips while risking 10 pips. Now, another thing you can do is use our new containment bands. Now, we've had containment bands for years and years and years, but we put a new tool in here called the DSP center line. This is a super fast digital signal processing center line that will show you very likely maximum moves. And so if it ever gets underneath that DSP level, you know, it's likely to pull back a little bit. I probably wouldn't have sold this right here because of it, but you know, when it came back down again, it ran out a little bit of weakness. It's likely to pull back. Most of the time, these bands, especially when the upper band gets hit, you have a strong trend down, upper band gets hit, great place to go short in the direction of the trend. And these work on all time frames too, by the way. The default one we use is 60-minute, 1.5 and 2.0. This is a 1.5 band here, the 2.0 band on the hourly. Usually with a new DSP is the maximum low you're going to get. And this was so weak it actually went underneath it. So underneath the 2.0 level, it's where you want to look for, you know, reversals. You might have gone long here, because it usually doesn't continue down underneath there. Notice this level right here earlier in the day. Great place to get out of the trade if you sold up here at the upper value area. And as you scroll back and look at previous days, you will see that most of the time price is contained in here. Every once in a while it goes a little bit above it, but then it pulls back, hits the lower band, bounces, and so forth. Here's the dollar CAD. And I'm going to put the FX value areas on this just so you can see, you know, the accuracy of this and how it acts as a roadmap. Now the point of control, the yellow area, is the price where most activity happened yesterday. Sometimes it's near the top, sometimes it's in the middle, sometimes it's near the bottom. It can be actually a pip or two away from the upper and lower value area. These are real areas where the market had trades. So, you know, it was above there, you might have went to go long, you lost money, you shorted here, you might have made a little bit. When it comes back into this range here, you got long, you made a lot of money, you bought the pullback, you made some money. Comes back down, you're expecting it possibly to go up right here. The bars are pretty red. You know, if you went long right here, you lost money. When it breaks down underneath the low here, you wrote it down about 35 pips. So again, don't worry about whether you make money or lose money on any individual trade. It's all about a series of 10, 20, 30 trades you do during the week. You lose 5 pips here, you make 5, or you make 3, you make 20, you make 5. If you sold that double top right here, I'll put the containment bands on here so you can see again how well they work. I love the new 5-minute DSP based area, and a lot of times when the move goes up, it doesn't always hold the upper one. This is based on the last day's 20-day highest volatility. Today's volatility was higher than that. But usually if the market goes up, pulls back, goes up there, runs out of steam, when it comes back into the range, usually it's the end of the move, and you can see explosive move down. By the way, let me just put up our regular chart with the dollar CAD. As you can see on this one, the weekly and monthly trend are extremely weak. So when the market makes a double top like this and the weekly and monthly trend's down, usually the market's going to resume the longer term momentum, which is to the downside. So, it's another great way of trading.